On this day, I posted a fundamental bull thesis on ticker CRMD. And since that day, the stock has gone up over 17% just over the next 11 days of trading. I now have another ticker which aligns with this same exact thesis that we'll get into later in this video. But first, I want to go over how I find these fundamental setups using ThinkorSwim so that after you watch this video, you will then be able to find these types of setups all by yourself. If you're wondering where I posted the CRMD trade idea, it's actually in my Discord server here in the Trey's Picks channel. And actually this morning, I have posted the new setup that we're going to cover later in this video in this channel as well. If you're interested in accessing this Discord server, check out the links in the description down below. You can access it at no extra cost when you sign up to the annual plan on my website to access all my custom codes. We'll talk about all that later in the video. Let's get into the action now. This is a growth stock investing strategy, and it is a very simple one. So much so that we are only going to look at two values. First being the sales per share quarter over quarter. We of course want to see this increasing. We want to see this value growing. This is that chart that I posted in the Discord for ticker CRMD. You can see over the last 4 quarters, the sales per share on this company has exploded. Next, the second value we're going to look at is the EPS, the earnings per share. We also want to see continued growth in this field as well. And just as with the sales per share over the last year, you can also see here that the earnings per share went on a really rapid growth. This time last year, the company was losing 80 cents per share. Now they are making 78 cents per share. That is a rapid increase in the earnings per share alongside the sales per share. Luckily, ThinkorSwim makes it very easy for us in their free scan tool to find stocks that have both strong sales per share and earnings per share growth. Now, later in the video, we will go over a scanner that we can build to return to us really the kind of stocks we might be more interested in investing in. But I just want to show you first the columns that we want to add, because that's where the real power of this scan tool comes in. Honestly, you can run any filters you want. Just limit down to just the types of stocks that you're interested in buying. I am simply only looking at stocks that are trading over $1 per share and have traded more than 1 million shares of volume on the day. Pretty much the two most basic stock filters you can have. Then what I'm going to do, I'm going to come into this cog icon to the far right of my result headers and into customize. From here, we're going to add a couple of columns. The first, of course, being sales per share. Double click to add it to our current set. And using this drop down on the sales per share column, we're going to switch the value to the year over year percent change, because of course that's what we want to look at. We want to see stocks that are growing, not that just have a high sales per share number, but that have a high sales per share growth. Next, obviously, we are going to add in the earnings per share. Here, we're going to look at the trailing 12 months. And once again, from this drop down, we are going to look at the year over year percent change rather than the current value. We can go ahead and hit OK on this. And now really we can sort ascending top down by either one of these. Let's just go with sales per share. Look ascending top down here. We've got a stock here at the top, 99% sales per share growth year over year. And now we can look at this next column to sort of confirm, hey, is this a good symbol for both of the metrics we want to look at? Yes, the earnings per share growth is also 339% on this ticker. This is a ticker we are going to want to do a little bit deeper research into, being ARWR, Arrowhead Pharmaceuticals. So now, just to continue the process of showing you exactly step by step how I go about my analysis, I saw ticker ARWR from my ThinkorSwim scanner simply using those two columns, right? So now heading on over to Google, I'm going to go ARWR PS ratio, and then macro trends. Macro trends is the website that I look at, and I'm not affiliated with this website at all. I don't know who runs it, anything like that. I just like the data it spits out. But we're going to go look at the price to sales ratio of this ticker, because on this price to sales ratio chart, it also gives us our sales per share number. Now, we can of course see we are getting that massive sales per share growth that we found in the ThinkorSwim scanner. I will tell you something when looking at this though. This is not a stock that I love. This is far from an A+ setup for this type of fundamental scan that we are running. Why is that? It's because the growth isn't consistent. Remember the other ticker we looked at? Actually, I can load it up here. The what was the CRMD? This price to sales ratio, consistent, up, 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 and up, right? This what is this again? ARWR, whatever it is, not consistent. It was up, then it's down, now it's back up. Like, yes, the year-over-year percent change is high, but it's not consistent growth. We want to see both heavy growth and good consistency along the way. So although this is at the top of our scanner, and for good reason, it deserves to be at the top of the scanner, once again, peel that extra layer back. Head on over to macro trends, make sure the growth is consistent. For this ticker, I would not be publishing this as an amazing trade idea. Does that mean the ticker won't go from $22 back up to $60? No, it most definitely could do that. That's not what I'm saying. It's just the purpose of investing, the purpose of buying stocks, really all you can do, unless you've invented the time machine, all you can do is put yourself in the best situations to make money. And I just think this isn't as good of a situation, say, as CRMD is, because of, once again, the consistency that this chart has that the other just doesn't. Let's actually also, before moving on and looking at other tickers, let's go into the PE ratio here on macro trends as well, just to confirm. And yeah, the PE ratio, the earnings per share, should I say, is growing rapidly. I mean, they just went from losing $5 a share to now only losing $1 a share. So once again, the scanner is correct. There is good earnings growth in this company as well. Once again, just not quite the kind of consistency we're really looking for in an A+ fundamental setup. Hopping back into our scan results, we can see the next stock on the list, when sorted top down by sales per share growth, is ticker TE. 98% year-over-year sales per share growth looks outstanding, but we can look now over to our next column, being the earnings year-over-year growth, and we can see that that is actually negative. So this is not one that I would consider to be a good investment using this strategy. Hopping back into macro trends quick to confirm this, remember here we are looking at the EPS chart. If we go take a look at TE and we come down, we can indeed see that, yeah, this company is actually losing more money than they have been in the previous quarters. This once again makes it far from a acceptable setup using this type of growth strategy that we're building in today's video. Now, we just looked at two examples of setups that look good on this scanner, but don't actually translate into A+ setups once we peel that layer back, once we just go one layer deeper and go look at macro trends. And that's very important to understand. Hell, it might be more important to understand which types of stocks you shouldn't buy, even versus the ones that you should. But remember, there is a stock that I found in doing the research for this video that matches my growth fundamental thesis perfectly. I don't yet see it in this list of stocks. Oh, wait, actually, never mind. Not quite it. I don't yet see it in this list of stocks, but I know how to find it. What we're sorting by top down right now is sales per share. Remember, we have the earnings per share as well, so why don't we try sorting top down by that instead? We're now looking at the companies that have the highest earnings increase year over year. And the top stock on the list now is actually the stock that is matching the A+ setup for the growth thesis that we're building in today's video. Heading back on over into our Discord server. By the way, this server now consists of over, wow, I didn't actually realize how close we were to 500, 494 members. Just a lot of eyes on the market, sort of always talking about what's going on. So way more than just a place for me to post my trade ideas. If you're interested in always being able to stay on top of what's moving in the market, it's just a great place to be. Once again, I'll tell you about how you can join this Discord here in a second. For now, let's hop into my picks channel and let's come down and let's talk about ticker AFRM, which I just posted this morning. Once again, some screenshots from macro trends. You can see here that the sales per share growth on this company is not only very strong, it's a very strong year over year. I think it was something like 29%. It said was the year over year percent change in ThinkorSwim, but it's also got that really nice consistency to it. Just up and up and up and up and up, quarter over quarter. Just a lovely looking chart. Then we can come look into the earnings per share. And what I love a lot about the earnings per share of this company, as far as a high risk, high reward growth sort of investing strategy like we're covering in today's video, is not only, yes, it's growing rapidly and it's growing consistently. That's great. But also last quarter, it reported positive earnings for the first time. I love a company that is consistently growing and just gets into profitability. These are the kind of names, once again, they are high risk. Anytime you're investing in a growth stock, maybe I should have mentioned this earlier in the video, but growth stock investing is high risk, high reward. I've said this a lot in a lot of my videos. Returning subscribers will have heard me say this 100 times, but there's no way in the stock market to increase reward without also increasing risk. That's just the name of the game. So if you're looking for a high reward system like this one, you're just going to have higher risk. But anyway, my favorite high risk, high reward investing strategy is to get into these companies. Once again, obviously consistent high growth, but that just get into profitability. It puts it on the radar for a lot of investors, which is obviously good for bullish volume. Let me show you a couple examples of what I'm talking about, and then I promise I'll get to how you can access the Discord server. Taking a look here at Palantir, obviously maybe the strongest growth stock of the year. Looking at their EPS, we can see right when they went profitable for the first time is right at the beginning stages of when the stock price started going nuclear. If we go look at Robinhood's EPS chart, another very successful growth stock in 2025, as soon as they got to profitability is right at the beginning stages of when their stock price began going nuclear. And the third one, another very successful growth stock on the year, SoFi, as soon as they got to profitable just a couple quarters ago, that is when their stock price started going nuclear. Obviously, what I'm doing right now is a little bit of survivorship bias. I get that. I'm looking at stocks that have already been very strong and then looking back at the past history of it. It's just a small example and confirmation of this idea that a stock growing and getting to its first quarter of profitability is a big first step in the beginning stages of explosive growth in the stock price. Now, let me talk about and confirm to you the extra risk that I'm talking about with growth stocks. If you're watching this video on the day it's released, you'll be looking at these tickers and going, well, Trey, AFRM is currently down 6% on the day. CRMD, the other ticker we were looking at, is currently down 4.5% on the day. Well, this is because the overall market is down. If we go and look at the S&P 500, the S&P 500 is down 1.5% on the day. That is a extremely red day for the S&P 500. And that's what happens with these growth stocks. Growth stocks are essentially leverage companies. If the market is strong, which it usually is, the growth stocks are going to greatly outperform the market. I mean, when SPY went up, what did I say? Over the last 11 days, CRMD did like 14%. The market only did 2% or whatever it is. Not even, because it was back here. The market only did like 1% up, and CRMD did up 14%. But now when the market gets hammered, when the market has a very red day, CRMD is going to get hammered exponentially more. Just as they grow exponentially faster, they also come down exponentially faster. So that's that extra risk to reward that I'm talking about with these tickers. And maybe this makes me a bad salesman. Like if I was really trying to sell you on this strategy, I wouldn't explain this to you. I would pretend it's all peaches, butterflies, and rainbows. But you all know I hate to do that. I don't ever want anyone like subscribing to the ideas I post on this YouTube channel thinking they've found the holy grail and they're never going to lose again. No, every single strategy in the stock market has downside risk. The downside risk of a growth investing strategy like this is what I just explained. When the larger market gets hammered, these stocks are going to get hammered even harder. It's just the name of the game, unfortunately. If you are interested in accessing that Discord that is now pushing 500 members to stay on top of ever-changing market conditions, as well as to get insight into my picks like gone over in today's video, you can actually access it from my website, daytradingstrategies.net, at no extra cost. And there is currently a Labor Day sale going on. Today will very likely be the last day of this sale, as there are now only 4 codes available out of the 30 I made available to take 30% off. So you get access to the Discord for life, by the way. I'm not going to kick you out if you decide to unsubscribe from my website or anything like that. Once you're in if you sign up for the annual plan. Now, if I didn't explain it, I don't think I have yet, what this website gives you access to is over 150 plus custom coded ThinkorSwim scanners, like the one you saw in today's video, studies, even trading strategies, etc. So you're going to get access to all of that, all 150 immediately, plus whatever I add over the next 12 months, plus lifetime access to the Discord server. And the next 4 of you to use discount code LABOR30 at checkout are going to get access to all of that for less than $280. It's a pretty amazing deal if you are interested in it. Once again, daytradingstrategies.net. I will link it down in the description below this video. Head on over, go read the reviews for yourself, help decide if this is something that could help accelerate your personal trading journey. Sign up today and become a better trader immediately.